Okay, let's talk about our top three recommendations from Stock Trade Genius and Market Club. Our Stock Trade Genius recommendations for 2015. Now, of course, this is depending on if the market continues to go up. But if we believe that if it continues to go up, we've got a good one here in Alibaba, symbol BA. Today, by the way, is the 30th of December. So we're looking forward to 2015. I don't think 2015 is going to be a phenomenal year for the market. It may be, but now that the Fed is pulling back, or they say they're pulling back, we still think they might print money, but they're pulling back. That means there's going to be a little bit less liquidity pumping up these stocks, and they're at all-time highs right now. And Alibaba is one of those stocks they're giving us a free one here, kind of. It's pulled back quite a bit, about 20% from its highs. And let's take a look at what we have here on the chart. Let's start it with the weekly. You can see here on the weekly, the stock dropped as low as, about $80 or so. It opened here in the mid-90s here after its IPO, dropped considerably, and then shot up over the next 4 or 5 weeks. And then once it got up to the 120 level, it started to sell off. Now we're going to go over to the daily on this side and see what happened during that sell-off. You can see that during that sell-off, there hasn't been a huge amount of volume. In fact, it's kind of just trailed off. And, it certainly wasn't the intensity that we had here in this weekly run-up, or this, if you look at it in the daily, it's not the intensity that we had there. It's kind of sporadically selling off, and kind of if you had to draw a little chart here, in fact, let me go ahead and do that, it would kind of look like this. Kind of like, okay, we're making the bottom of a cup, and now we're trying to go up and make the other side of the cup here, right? You see that? So now we've got a little handle that's developing here in Alibaba. And frankly, these last few days don't count because they're around the Christmas holiday and the New Year's holiday. There's not a lot of volume going in and out of these, so you can't really count it. So you just have to look at this 110.66 level, which is really the top of this handle. And we have a $141 target price on Alibaba, and if it goes up 141, it's about a 35% increase. And there aren't a lot of things that move up 35%. Now, let's talk about the fundamentals of Alibaba just real quickly, because we think that's what's going to drive the stock higher if the market continues to go higher. If it doesn't, obviously this whole recommendation doesn't really count. And you have to kind of look at the other side of the market, the short side of the market, and we have recommendations on that as well. But Alibaba has a few good things going for it. First of all, it's got about 300 million users in China, and it's expected to keep increasing that. Number one, the return on equity of Alibaba is 112%. That means if you give them $1, they end up giving you back about $200 or $2 or $2.12. And so the 112% return on equity is, boy, they really do pretty well with your money. A lot of return on equities that we like as a minimum are around 20%, meaning you give them $1, you get back $1.20. In this case, the return on equity is you give them $1. Not only do they give you back your dollar, but they'll give you another $1.12 on top of it. So we really like their return on equity. Now, the earnings per share growth rate over the last several years, it's 116%. And if that continues, and it's expected to continue that climb, that's an incredible amount of earnings growth on this company. There aren't a lot of competitors. Basically, they have a pretty unfair advantage in the market. And so if you think of what they do, they're like the wholesale Amazon that we have here in the U.S. But the cool thing about Alibaba is they're trying to get the U.S. to sell in their market in China. And Chinese people like U.S. goods, even though we don't produce a lot of them anymore. We mostly buy things from China. But if we produce things, they're pretty large things, metal, steel, things like that, movies and soft goods. But they like the things that we do produce because they're considered higher quality. So if we can start selling into those markets through Alibaba, you're going to start seeing Alibaba really reaping the benefit of that. So it's got an EPS growth rate of about 116%. That's a 3-year growth rate. PE ratio doesn't really matter to us, but it's 51. You're going to go 51? Yeah, but when the stock is growing with its earnings at 116% of PE ratio is 51 is pretty cheap. Actually, some of the highest growth stocks in history have high PE ratios. So you really shouldn't use PE ratios if you're going to be in growth stocks because it doesn't really matter. So I say it that way just so you can get a relative idea. PE ratio of 51 on Alibaba. They're expected to make $2.20 in 2015 and to grow that by quite a significant amount to $3.03 in 2016. So anyway, we look at a target price of 141. That's a 35 or so percent increase from where it is here today at 105.50. And we think that this is one of the great recommendations coming up this year, provided the market does cooperate and we are able to follow this stock along with an upward trend. Our next recommendation for 2015, again, provided the market continues to go up, and this is a trend following recommendation. It's NXPI, NXP Semiconductors. They're out of the Netherlands, and the semiconductor business has become quite a big business, and it's actually a market-leading sector right now at the end of here, 2014. So we think 2015 will continue that trend as we need more and more semiconductors. And these guys do a lot of stuff related to wearable technology, Bluetooth technology, things that are hip and trendy and probably going to be in more demand next year. So let's take a look from a fundamental perspective of NXP Semiconductors. It's got a return of equity on 71%, which means for every dollar you give them, they give you back $1.71. Pretty good. Earnings per share growth rate over the last 3 years, about 84% on average. So that's a pretty significant amount. They're expected to go from $3.29 in earnings this year to $4.72 next year. Well, that's 2014, I should say. And then in 2015, a $5.47. So that's an increase from $3.29 to $4.72 to $5.47. That's the right trend. And you'll see this one has a really low PE. Again, not the PEs matter, but just so you can get a relative idea of price to earnings ratio. This stock is in a first stage base, and it's having a little bit of trouble breaking out from here. Let's take a look at the weekly here that you're looking at on this chart. You can see that it made a deep V correction down through the 200-day moving average, and then you could see that huge volume here that built it back up over the 200-day moving average over the next couple of weeks. And then you've seen the stock shoot up from there. So it hit a low of 53.81. Boy, would it have been nice to buy that. But that's the riskiest time to buy a stock, because a lot of these times these stocks keep going down. So anyway, it hit 53.81, it hit 78.16, and now you've seen it pretty much in a flat little base on this base here. This is a cup, and then there's been a little bit of a flat base right here, or a tight pattern, which means that the mutual funds and the big money are holding it up here because they don't want to lose money. It's now looking like it's bouncing off its 50-day moving average or its 10-week moving average, same thing since we're looking at a weekly. And we have a target price based on this ABCD move that we have of $96 or so. Now, it could go higher, may not go that high if the market doesn't help it, but it's in the right sector, it's got the right fundamentals, and the technicals are setting up for this to go to 96. Now, if it does that, it's about a 25% increase from the level that we have. I'm sorry, it's about a 20% increase from this level. A lot of stocks don't increase 20%. NXP, we think, will. And if the company continues to grow its earnings per share at 84%, that's probably just a very conservative increase. So our first target price is at $96 if the market does cooperate. Let's just take a quick look at the daily, and you can see we've had some sell-offs here in the last several days, but the volume is very anemic because of the holidays. And so that's just an opportunity for the mutual funds to scare you out. And if the trend continues in the market, they're going to buy those stocks from you at a lower price and then drive it up a little bit higher, we think, to $96. Of course, we want to recommend that you put your stop prices probably on the other side of that 50-day moving average here, and just be careful. You want to play a lot more defense than you play offense. So if we're wrong, we're wrong. We want to be wrong small, and when we're right, we want to let it go and run big, 20% or more. And our next recommendation is Tractor Supply, symbol TSCO. Again, we got a target price of this stock, $116.11. Currently trading around $78. If this goes to $116, that's a significant, almost a 30% upside move. And again, 30% upside move is pretty darn good, especially if you do it with options and you limit your risk and you extend your upside potential with leverage using options. So let's take a look at what we think about Tractor Supply. First of all, beautiful uptrend here and a correction after this big move right there on that huge volume, and then it went down below the 200-day moving average, below the 40-week. Had a little rebound, but I didn't like the volume on the rebound, and so it did a little bit of a rebound on low volume. And as you know, low volume rebounds don't generally work. And so that's continued to sell off, and got rid of a lot of sellers, even though it wasn't on very big volume, as you can see at the bottom. Finally, the Genius indicator went up on a pop on huge amount of energy here. You can see that volume there on about 3 times the normal volume during that week. And then the Genius indicator went up. And that's basically telling you that everything's a green light and things are looking up. Had about 7 or 8 weeks straight up. Not on big volume, again, coming into the Christmas holidays here. And you can see it's just kind of sitting tight here. So there's a beautiful cup and handle formation, or just a beautiful cup with a little flat base that's building right here at the end. We think it's right at a breakout point here at the high of this particular day right here, which is 78.17. So 78.27 is your high, and it's at 78.26 today. So it's right at that pivot point. And if it breaks out, we think it's going to 116.11 on the longer term target price, right at 101 on the shorter term target price. And again, that depends on the market cooperating. Let's look at the daily. Daily, you can see all that energy with this big gap up. The gap up hit above the prior pivot swing point, and it kept going up from there. And now it's just basically consolidated its gains, getting ready to pounce again. So it's coiling the spring right in here. Genius indicator is not looking that strong on the daily, but it is positive right now, and it's not that strong, but it looks like it could continue to go up based on the fact that the volume is pretty weak here for the holidays. Fundamentally, the return on equity is 29%, earnings per share growth 28%. We think the stock's going to go a lot higher, and we think that that target price of 116.11 is in the cards.